Well, good morning. That sounds like crap. Yeah. It's a great way to start a stream with horrible music. Maybe I can just get rid of that. Yeah, I don't know why it's doing that. What is going on with that? Okay, it's gone. Hey. Okay. Well, we'll see if we can get the music back up here in just a minute, but welcome, welcome, welcome. It's Wednesday, May 24th, 7 a.m. New York time. We are entering the ICT kill zone for Forex pairs, 7 a.m. to 10 a.m. And so we're just going to be looking and seeing what's going on. Good morning, Corey. Welcome in. Man, what a day yesterday. We had quite, again, the roller coaster. We're going to talk about what happened yesterday. We're going to look at what's going on right now and see if we can participate. I did prices so far delivering exactly the way I had drawn out on Monday, reaching down lower into these areas. We were anticipating dollar to run up into this daily imbalance up here, which is in line with the OTE of this overall longer run here. And it may go higher after that, but that's our initial draw on liquidity for this week, and we're heading that way. So that's good to see. Pound, we had said we were aiming for this liquidity down here, and currently we have grabbed some. We might have grabbed that. Yeah, it looks like we did grab that liquidity. So there's a couple more things down here for the pound to take, and euro as well. Our draw is, our big draw is down here on this liquidity, and then you have a daily volume imbalance down here. So price so far this week is moving just as we anticipated. So that's cool to see. Let's look at what happened yesterday. So we were streaming all during all of this kind of consolidation. It dropped, and I had said during the live stream I wanted to see price come back up into a premium level, enter some of this area here. And so after we got off the stream, we see price start running up, and that's when let me see if I can, somewhere around here, I tweeted out the sell limit, and I was anticipating this fair value gap, and I wanted it to get up into this order block, this 15-minute order block, a little bit higher, and fill in that gap. And you can see this was where our limit order was set, and we got literally 2 pips away from entry, and it just tanked. But pound was moving a lot slower, and it did get up into its, make a big dig into this same similar 15-minute fair value gap. There was a 5-minute I can't talk, fair value gap in here. Right there is a 5-minute fair value gap. And so I see price coming up. So euro, while it's dropping, pound is just hanging around and not dropping, but still a great setup into an order block, into a fair value gap, into an hourly bearish order block overall. And I start seeing it reject and seeing that 5-minute fair value gap be respected. And so we called out a limit order pretty much right after that euro one got swerved, anticipating the pound to follow the euro down. Now it did, but not as aggressively. We did get to move to break even, and here we got within 2 pips again of our take profit, and then we come back up and get wicked out. Now, eventually it did overnight never come down to reach our take profit, and it would have hit our break even if it did all this anyway. So the frustrating part is that we didn't get a win, but we've got a break even, and I don't know where my stats are. Why are my stats not showing? Man, I thought I was ready to go today, and I guess I'm not. We're on day 11, and we're in phase 2 of the 10K challenge with that bespoke funding. We have taken, I believe, 7 trades. I'm just calling out my stats. We have 3 winners, 1 loss, and 3 break evens. And there's 5 things that can happen anytime you get into a trade. You can lose really big. You can lose small. You can win really big. You can win small, or you can be break even. If you can take out one of those, you're going to be profitable. If you can take out the big loss, you're going to be profitable. And so what that means is, if we're consistently hitting break even, small winners, and an occasional loss, we're going to be fine. That's why the break evens, while they're frustrating when you hit a couple in a row, especially when it gets that close to your TP and it doesn't hit, this is where the mental mind games come in with traders who are trying to pass challenges. We don't have a time limit on this thing. It doesn't matter if it takes us 3 more weeks to pass phase 2. We're going to wait for our A+ setups to get in. So yeah, that was what happened yesterday. Tweeted it all out. If you don't follow on Twitter, follow me on there, because I do put in every trade that I'm putting into my own MT4. So let's get in, because we've had some aggressive price action happen overnight in London. London pound had some inflation news come out. It came in just a little bit hotter, the numbers, than they were anticipating. And so London, the pound has been super weak, and the dollar has been super strong. As we head into this last probably 10 days before we get to see what happens with this debt ceiling stuff, and whether the U.S. is going to default on its debt payments and the interest it's owed. Until we get some resolution there, I'm anticipating dollar strength and the markets to be weaker, foreigns to be weaker. We do have red folder news. FOMC meeting minutes will be coming out, and those minutes that's later this afternoon. Those minutes hopefully might give some clues into what all the Fed guys are thinking about the next interest rate hikes. We have CPI data coming out. We have unemployment data coming out this week. So a lot of volatility going on. There's a lot of stuff just in real world that is causing some major hesitancy and uncertainty in just people feeling good about what's going to happen with their money, with the economy, with the markets, everything. So dollar has taken out yesterday's high and yesterday's low. So when that happens, you are wondering what's the true direction. I still think we're going to head lower, but because we had such a massive run, I would, just like yesterday, anticipate some kind of move back up to rebalance this inefficient price action. It does not have to come all the way back up and grab every last little fair value gap that it left behind. But a retracement would be anticipated. If this next hour order block closes extremely bullish, this hour that we're in right now, then I would think that this was a stop hunt and we could be coming back up to retest some highs. But I would rather see it come up, not give us a major bullish candle here on this hour, and in the next hour run up back into this fair value gap somewhere. You have a 30-minute order block up here. You've got the same 15-minute, and you've got some fair value gaps. If you take the high of London, your premium discount level is here. If you just take the most recent, you want to see price get back up into this level, which lines up with this order block, this fair value gap right here on the 15. And yeah, let's see if there's anything else. I mean, that's a beautiful 5-minute. This is the 15. You have a 5-minute right here. So seeing price come back up into this before we look for sells on the pound is kind of my initial thinking right now. It doesn't have to. If this is going to run away, it's already tapped into the most recent fair value gap. It does not have to come all the way back up. If you look to the right, to the left, this candle here that grabbed all this liquidity started down here. I'm sorry. Yeah. Yeah, I still want to see it come back up in here. I was going to say that this could be a breaker, but I don't like all of this. We get a break of structure right here now, currently. So yeah, I would anticipate, I want to see price kind of rally back up here before we fall off on the pound. Euro, again, same thing. We've taken out yesterday's low. We did not take out yesterday's high before this. And so with the dollar making such a strong push, again, it's very similar to what happened yesterday where London moved aggressively. Dollar kind of retraced during New York and then fell away again. Do we see something similar happen again today? I don't know. With FOMC minutes coming up later this afternoon, I don't know if I'm going to take a trade today, quite honestly. We have had a liquidity grab. So this would technically be a 15-minute breaker with a fair value gap that hasn't been tested. So you can see it grabbed this candle right here. We failed this place lower, right? We consolidated, we moved up, we took out that high, intermediate term high, and then we displaced below it. But I don't know what, so I don't even know what I'm saying right now. I'm kind of frustrated about my stream. My audio didn't work and my stats aren't showing up. And it says there right here on my Streamlabs OBS studio monitor, you can see all the different elements that you're supposed to have on your screen up here. And there's supposed to be some stats right here, and they're not there. And my audio sounded like trash today, my music stream. So that kind of sucks. But on to the good stuff. The indexes are, you can see I'm marked out until US30 gets outside the stealing range. I have no interest in it. NAS is made a high and dropped. S&P did not make a new high and is dropping. So there's some serious SMT divergence between S&P not being able to make a new high and the NAS did, and then they're falling off. So we did note this way back last week. that there's a lot of sell side liquidity here that retail is going to trade. They were probably, a lot of people were trying to go long off of that trend line, and there's a fair value gap. It needs to retest this area here. So all of that means I'm expecting lower prices, especially with all the stuff going on with the debt ceiling stuff. You would anticipate a weaker market structure here. We just opened a new 4-hour candle on the dollar, and it left no wick. So typically, price does not like that. It wants to leave wicks. So anytime you see a candle with no wick, it's going to be a draw on liquidity. So like right here, this 4-hour candle left no wick behind, right? So when it closed bearish, and then the next candle, the next 4 hours opened, and it didn't reach up into it, as it opens, I'm anticipating price to come up and grab and close off that wick, that no wick candle. Same here. There's a teeny tiny one there, but there was no wick right here on this 4 hour. We've opened this hour and we just started dropping. So you can anticipate, even if it comes down into here, this candle's going to get, the high of this candle is going to get taken out. And it may be this hour, it may be the next hour. You can see on the 30-minute, same thing. Just go back and look at your charts. Anytime you see no wick candles, they're great draws on liquidity. So again, it just kind of keeps me thinking, oh, we're going to remain bullish here. This is just a pullback. Price is respecting bullish order flow. Left some volume imbalances down here on the 15-minute on the dollar. So yeah, that's kind of what we're looking at. On the 15-minute time frame on the euro dollar, bare minimum, price reached back up into a premium off of this leg, into this buy side or sell side imbalance. Price only offered sell side. It needs to get an offer buy side. It does not have to close it out, but it does want to reprice and provide efficient price delivery. Smart money concepts taught by ICT. I'm not here teaching his stuff, but I'm explaining to you what I've learned through him. You can go watch all of his videos and learn all you want for free. But if you want to cut through all of the rambling and rants, hang out here. You can learn a few simple concepts that he teaches that will help identify high probability setups. Gold is consolidating back up inside of this order block on the 15-minute time frame. If you look on the daily time frame for gold, we're right back at a bearish order block inside of a fair value gap. So this candle right here on the daily time frame for gold, we moved down so that we had this massive displacement up to grab liquidity of these old relative weekly highs from 2022 and 2020. Grabbed all that liquidity, and now we have displaced with aggressive movement back below that swing low. So this is your daily bearish breaker for gold, and price has displaced. It's come back up into it and respected it 1, 2, 3, and now we're on day 4. There is a small fair value gap up in here. So I am anticipating that gold, you could see a pop up in gold a little bit higher, but then I think it's going to head lower off of this bearish breaker right here. I'll just put it in so that we can notate that. I always start over on the side so I get it nice and clear. We'll see. Move that over now, and then we'll make this teal. That's a daily bearish breaker, and you have a fair value gap inside of it on the daily time frame. Nice draw on liquidity for price to rebalance, but I would expect this bearish breaker, since it was what catapulted price up and now we've broken back down through it, I would expect a nice respecting of that. But we'll see. Dollar coming back down strong, falling pretty hard after grabbing liquidity. So is Wednesday the high of the week? Do we go any higher? I remain bullish. So we're going to need to see some change of structure on a higher time frame before we change our overall perspective and bias for the dollar. We're currently bullish dollar because it's in an uptrend. It's moving from the bottom of the left screen to the top of the right screen, stair-stepping up, and it's respecting bullish PD arrays, fair value gaps, order blocks on the daily, on the 4-hour, and on the lower time frames as well. The lower down you go on a time frame, it's not going to be as clean. You're going to see pullbacks that step down into larger time frame order blocks. That's why you don't counter trend trade thinking you've called a top and found the reversal. You don't know. You need the higher time frame to show you what's happening. So we're getting this pullback here on the dollar right now from the overnight run. The dollar, here's the run on the overnight from London. So you would anticipate it wanting to come back down into here, which lines up this fair value gap at a discount around that 4-hour, start of that 4-hour, it's actually 8-hour order block, but you can see both of these candles together would make up an order block. On the 30-minute time frame, that would be my first point of reversal, getting down into past a discount level. We're in a premium right now, so if it gets back down into a discount level, this is the first 30-minute order block I would want to watch and see what price is doing on a lower time frame. Pound is running back up again. Anticipating at least getting up into this fair value gap into, I don't know if it's going to get up to this 30-minute order block. It might. We'll see. We've had a grab of liquidity, so it has taken out sell side liquidity, which means we have to wait and see what's going to happen next. We didn't get to participate in this rundown. Well, we were hoping we could participate in this rundown, but that happened during London overnight. We were in the middle of the night here, so didn't get involved in that. In fact, as I looked back, I got up this morning. I was like, hey, was there an entry anywhere in here on a breaker, on a good order block? Would this have fit our setup if it was, let's say, New York, right? So if we replay this, we don't know what's going to happen. Take all this off. And so we're coming into, you had red folder news, so we wouldn't have traded red folder news. We would just let that go, and you get your big spike up off of the news. And what does that do? It takes out all of your buy side liquidity. It takes out yesterday's high. And so because we're bearish, that would have been the liquidity run we were waiting for. And now I want to see displacement below this candle. This is the 15-minute candle that shot up prior to that move, right? It was down and then we exploded. So if we get displacement below here, we look for a fair value gap entry to target a 1 to 2. And if you look on the 5-minute here, and this is all that 15-minute, but you could look at this 5-minute as confirmation if you get displacement below there. We've made a new high. So this is still your 15-minute. I know this little bitty bearish candle right there, I would not consider that. I would still be using this. On the 5-minute, I'm still looking for displacement below here at the bare minimum. Okay, we get it. Do we get a fair value gap left behind after this next candle? Yes, we do, right here. And so I would have said, I want to see price come up to the bottom of that breaker. I would probably put my stops somewhere like right there, above that swing high, above this fair value gap. And I would target 1 to 2.15 just to get it true. And then see if it comes right back up but does not get into our entry. You get a displacement below the 15-minute time frame off of that. If you were just using the 15, you would have said, I want to see price come back up into that fair value gap off of that breaker. Put our stop up here, target 1 to 2. And you can see price never gets back in. Right here, you now have a new 15-minute order block. And so you would have canceled this order and you would have been looking for price. After on this candle's close, you would have been targeting the body of that 15-minute order block, and you could put your stop above the body high, above there. I would probably go just a little bit above this 15-minute order block body high. Target my 1 to 2, just over 1 to 2. See if we can get an entry. We don't. It takes out our take profit, takes out sell side liquidity. So we would have not gotten an entry on any of that run anyway. On two really good setups, but price didn't do what I wanted to see it do, which is what I said yesterday. If price is not doing what you see you want it to do, it's fine. You're just watching the ocean move. That's all you're doing. That's it. It's the only thing. So I'm going to be watching up here, see if we get some kind of reaction. We've had a buy side liquidity run. We've had a sell side liquidity run. So we could just chop around until this afternoon when the FOMC meeting minutes come out. Euro dollar is back into a premium now of this leg down. There were two legs. This leg down. This is your bigger London leg, so it's almost into a discount there. I mean, into a premium, back into a premium level. So you've had an aggressive run down through stops. You're seeing an aggressive run back up into the range. This right here would be a 15-minute breaker with a fair value gap inside. So right here, let me just highlight that for you. I have a 15-minute breaker right here. It's close enough. You've got a fair value gap up inside here. You've also got you'd be back above into a premium and into your OTE area here. The dollar still has some room to go to get down into a discount. It may not get all the way down here, and the euro looks like it does want to reach up a little quicker. I think I would want to target this fair value gap and this 15-minute order block if I was going to look for an entry. This is not me saying I'm going to set up an order here. This is probably what I would be looking at. that is a potential setup. One thing that I don't really like about it is how much chop there is all right here. So we've grabbed liquidity and we've grabbed liquidity, and now we're coming back inside this choppy area. So if we look at lines up with this hourly order block right here, we do have a fair value gap in the hourly time frame, getting quite the aggressive pullback. Again, no wick on the bottom of this hourly. The 4 hour has an hour and a half, and you can see here how much we did not displace below this low here. And now, unless in the next hour and a half we get a strong closure below here, we're not displacing again. 2 opportunities to take out and displace and close below this low, and both times it's failed. So this is, you know, not necessarily the most, I'm not feeling like this is a super high probability setup right here. Pound dollar, however, has reached up into its fair value gap, and it doesn't look as rejection-y as the euro does. This 1 hour order block you would want to see be respected if we're going to go lower. And so this up candle right here is a bearish order block. It sent price down and took out a low. So from the wick to the body, right there, I would be anticipating some type of reaction when price reaches there. If you look down a lower time frame, lines up with your, this is 15 minute, this is that hourly. All these candles make up that hourly order block. It would be back into a premium right in line with your OTE level on your fibs. And it would line up really nicely with this 5 minute order block right here and this fair value gap. That looks like a way cleaner, prettier setup to me. I would be careful not just entering right here, because you have some imbalances above that 5 minute order block and you're still inside this hourly. Price can come up. It can come all the way into that. It just doesn't, you don't want to see it close back above that 1 hour order block right there. You want to see it come up and maybe engineer some liquidity on a lower time frame. You have to trade your plan, and you have to plan your trades. That's what this is all about, is coming into the market every single day. Trading is boring. It really is. It is boring because probably 99% of the time, you're sitting here watching and watching and watching and watching. But that's what good traders do. They wait for price to do what they're anticipating it to do, and it fits their setup, it fits their trading system, and then they execute. So if price is not going to cooperate with us, we're not going to be worried about it. when you get these big runs on stops like this, and you see aggressive displacement up and aggressive displacement down, that's often a sign of a reversal. Meaning we're just grabbing these stops so that we can run lower and get sell side liquidity somewhere else. Because as it's to accumulate long positions, to accumulate positions that go long, you can see it comes down, grabs liquidity. You can see it comes down, grabs liquidity. And now it's run up. It's accumulated, it's taken out all the orders that were resting above here. It needs, if it wants to come higher, it's likely going to want to reach for sell side liquidity to do that. And where is the draw on liquidity? It could just be these imbalances. It could just be redistributing price to be more efficient through this whole run up, aggressive run up. It could be stops under here, under here, under here. This is the way price moves. This is why go sit at the ocean and watch. You'll see some waves that come way up, and then you'll see 3 or 4 waves that don't come very far, and then you'll see a huge wave come in. And you don't know which wave it's going to be. You're just watching and you're just looking at it. This is why I keep saying when I'm on here, I love watching price print all this, because when you're not in a trade, you're learning. And you're just watching this thing unfold every single day. And it's fascinating, absolutely fascinating, how the market delivers and provides efficient price delivery. I guess while I'm waiting on price, I am going to see if I can fix my stats. And you'll get to watch me do this live. Actually, let me studio mode. There we go. I don't know what my font size needs to be. Maybe not that big. $10K to $2 million funding challenge. Stats. Enter. This is nope. This is funding achieved. Currently $0 on this challenge. Current, let's see, account status is phase 2, 10K eval. I can't remember what all I had up there. And then I said this is day 11. And then this was let's do account balance is 10,035.57. Day 11. We had wins 3. Losses, we've had 1. And break evens, we've had 3. All right, we can move that here, and now we can make this. Whoa, don't want to do that. I want to do this. All right, now got our stats back. I need to move that up. Oh no, I guess I don't. It's fine. I guess it looks better when it's even with the video frame there. Euro coming up into that level that I marked out. I did not, that's not an entry, but it is back into a premium level. It has filled in that fair value gap. It's reached into this hourly order block. I said if I was going to take an entry, I wanted to see it get up into this body of that hourly. But I'm not taking an entry here. And seeing the pound currently hanging out there. The dollar still has not gotten down into a premium, back from a premium level into a discount from this overnight run up. The euro has, which means if the dollar is going to go deeper into a discount, the euro is going to run higher than it already has. The dollar is going to come down into this level, into an OTE. The euro's got to come up higher. But this is a huge run on stops and then immediate displacement back into the range. Massive sell side liquidity, failure to, when you see this right here, you see this displacement down and then displacement back up. That is exactly how reversals happen. Which is why I'm not taking a trade right here. This is not a trade. I am interested to see how it reacts off of this hourly order block. Because, and the reason I say I'm interested in this is if it respects this and we start seeing rejection and we start seeing on lower time frames here, like on the 5-minute, we see like maybe these relative equal highs get wrecked, and then we see, some break of structure here, and we could see a reversal and it roll back over. However, if we get displacement above this hourly order block, that hourly order block becomes a breaker. Because it's going to be the candle, the last up candle, that caused price to drop and take out a massive area of sell side liquidity, and then it displaces back above. If it does, this would turn into an hourly breaker right here. And that's a higher time frame breakers provide incredible opportunities to get in. But we're just watching and waiting. It's getting up close to where the body of that is. I just want to see what price is going to do here. It left no wick behind down here. My experience tells me that when you get a big move on London, you often um, don't, well, you can get a OTE retracement, but it just takes a lot longer to play out. Because when you want to see a gradual move back up into a higher time frame PD array that then can roll over. When you get something like this on the euro that's super aggressive into this OTE area after grabbing sell side liquidity, there's just something about it that doesn't feel right to me. Because I know the market is moving from liquidity to liquidity. And if I'm bearish bias and it's already moved to the liquidity on the sell side that I was anticipating and wanted to be involved in, but I did not get in, it's likely searching for now buy side liquidity. And so there I want to wait for buy side liquidity to get taken somehow. It doesn't have to be all the way up on a higher time frame. It could be at a PD array like an order block. On a lower time frame, there's going to be liquidity levels in there where people are going to have their stops. So that's kind of why this doesn't feel super, like I'm not just going to jump in and go, oh, it's at that order block, sell it. It is in a premium from the London run. It is at the OT level. It is at an order block, but because we had a massive run on sell side liquidity and you've had a massive displacement back inside, that one thing right there is enough for me to go, let's just wait. We're in no rush. We're in absolutely no rush to get into a trade and into a position. Knowing that the dollar has now reached into a discount level and into this 15-minute order block, into this 30-minute order block. This is where I said at the beginning of the stream, I would want to, this is the first area I would want to see what happens with the dollar off of this 30-minute order block right here. This is the last down candle that took out and made a new high and displaced above into buy side liquidity. So does price want to respect that? If it does not, then this would turn into a 30-minute breaker on the dollar, and we could see lower prices on the dollar. So we're just watching and waiting. We want to see. I just don't feel super confident about going long on back on the dollar, which would be bearish on the euro and the pound currently. If it's reaching for sell side liquidity here, there's stuff up under here, and then of course the low overnight lows. If it goes that far, then you're talking about actually getting a this swing low. I would want to see close below, because here's why. So you have a swing high, a swing low, a swing high, a swing low. You don't get displacement above this swing high right here. It grabbed it, but it did not displace above it. So everything inside this dealing range is still part of this swing leg here. Until you get displacement above a swing level, it's not a true swing high. It's creating an engineering liquidity, but this is your swing high that you want to see displacement above, which you get on that candle right here. You finally get displacement above that swing high, and so now this is the swing low that created that and displaced above the old swing high. Not this one. This one. That's where people get confused. You want to see displacement above swing highs and swing lows. Those are your true higher highs, higher lows, lower highs, lower lows. So we had displacement, but now we're pulling back into it. These are order blocks, because this order block here is what created this order block down, is what created this run up. So these are true 8-hour order blocks in here. And from that order block low to the current swing high, that's where we pulled our fib from. you are seeing some initial rejection and reaction off of that 30-minute order block. Euro is getting a nice rejection off of that OTE. Did it get to... I don't think it got... Yeah, it didn't get to the body, which is where I had initially said that would be the first place I would be interested to see it go. I have about 9 minutes here for this first hour to close. Let's rebalance all of this aggressive move down now. You do have relative equal highs here on the 5-minute time frame. But that whole big gap has been repriced to provide efficient price delivery. It only offered sell side. Now it's offered the buy side, and it could roll over right here. Gold's making highs. You've got some buy side liquidity up here. It's likely targeting. Dollar's moving back up. If you have a bullish bias, then you want to see price respect bullish order flow. That means when it reaches, when it rebalances price and it reaches order blocks and higher time frame order blocks or breaker blocks, you want to see price respect those candles. And you want to see, if you're like, oh, this is a reversal, now we're going to go lower, well, then it should start respecting bearish order flow. So we'll watch these fair value gaps up in here. We don't really have 5-minute is kind of the only real, this little candle right here, you know, does it cause any kind of a reaction off of this when we get back up into here? Does this fair value gap here slow it down? Do we just start making new lows and bearish price delivery continues? Watch and wait. If you don't know, you do nothing. You want setups to scream at you, trade me, trade me, trade me. You do not want to be in a rush. You're not missing out on anything. We're looking for that low-hanging fruit. Does the text on this stat stuff, does it look fuzzy to you? Does it not look clear? It looks blurry. What can I do about that? Make it smaller? Does that help? I mean, maybe a little bit. My eyes are super dry today. I know that I could get some nice overlays. I just haven't figured out how to do it. I need to spend some time on Streamlabs and experiment and see if I can figure that out. Watching and waiting. Watching and waiting. Waiting and watching. That's all we're doing. I was talking to a friend of mine yesterday about what happened with all the 2 days in a row with break even trades. And we started talking about how we moved to break even on this system that we're trading for this challenge that we're doing. Our system rules, gosh, why my eyes are like that. Our system rules tell us that we move to break even when price moves 1.5 R in our favor. So we're risking 1, like R. 1 R is our risk. When price moves 1.5 R in our favor, we move our stop loss to break even, actually a little bit into profit, to cover commissions and spreads so we don't just slowly chip away at our account. Because if you move to break even, your broker is charging you commissions and you paid spreads on when you're getting in and out. And so you're not going to have a true, you would just start slowly chipping away at your account. So you want a true break even, means you have to move it about half a pip into profit to get that true break even. So our rules say 1.5. Now we're risking 2% per trade. So when price moves 1.5 R, that's 3% gain. Well, we want a 1.2. We're going for 1 to 2s. Our strategy says 1 to 2, 50% win rate. We crush it. And our data says that we're winning around 50 to 55% winning. Full take profits, about half of those. And that's currently where we're at right now. We've had 7 trades, 3 wins, 3 break evens, and 1 loss. So we're right at that 50% mark right now, which is what the data bears out and tells us. If you take your high quality A+ setups, that's where you're going to be. Looks fine to you? The text? Okay, good. Well, for some reason, like when I look at it on my phone, it looks, now that I've made it smaller, it looks better. I do need to find out how to fix that though. You can see the pound running up, the dollar's still dropping. Again, we want to see how it responds firstly to this 30-minute, but ultimately to these are your 3 1-hour down close order block candles, and then these 8-hour candles, but your swing low is all the way down there. And it looks like it is trying hard to reject off of that buy side liquidity run. Pound had a massive run on its liquidity and it's pulling back. Euro, massive run on its sell side liquidity. It could not hold this displacement below and it's ripping higher. So we're just going to wait and watch. Because we're bearish, our bearish bias, there are days when I would switch my bias and try to jump into a trade, but I'm not doing that on this 10K to $2 million funding challenge. For new traders and people who are having problems passing challenges, switching your bias in the middle of a day after you've done analysis is one of the most, you suddenly are like, well, maybe it didn't switch, or then this is just a liquidity grab so it can take out this low again, and my original bias was right. Just stick to your daily bias when you sit down at the charts, and if you see your setup, take it, and if you don't see your setup, don't take it. Pretty simple. If we get displacement above this hourly candle right here, like if this closes strong bullish here, and then you would have an imbalance. You could use that if you wanted to switch your bias for the rest of the week to say, oh, well, we're going to run up now. And we could use that 1 hour breaker as a potential entry point for that. Good afternoon. It must be lunchtime over in London, or just after lunch, looks like. Welcome in. No trades happening yet. Dollar grabbed buy side and is collapsing. Pound grabbed sell side and is reversing. Euro grabbed sell side and is reversing. Massive run down, massive run up. And so that typically signals a stop hunt on the sell side so that we can target some buy side liquidity areas. Scotland, but same time zone. What's the weather like over there in Scotland right now? I always picture Scotland as like kind of, I don't know why. I guess it's just like movies and whatever, but I picture it as kind of this dreary, cloudy, rainy place with a lot of green things because it's so wet. Grass, trees, whatever, meadows, fields. I really know nothing about Scotland other than that Scottish people have some of the coolest accents I've ever heard in my life. Surprisingly sunny, and I would be right. Well, I felt like it would be beautiful over there. Oh man, Irish. Jeez, dude. I think that is, I don't know if you have an Irish accent. I don't know. I think the Irish accent is the coolest accent in the world. Hands down. I think it's just fascinating to listen to as an American. I know probably people that have Irish accents are like, this is just the way I talk. But you got to understand, from people outside of your geographic area, you have one of the coolest accents. I wish I could figure out how to talk with an Irish accent. I think it's fascinating. English accents to me sound very proper and I don't mean this in a bad way, but like rich, like I don't know, elegant. Irish sounds beautiful to me. It sounds earthy and beautiful, the Irish accent. So you're seeing price disrespect bearish order flow. So it's disrespected these fair value gaps. It's disrespected order blocks. It's now running up pretty aggressively. The dollar is in free fall as we enter the 8 o'clock hour in New York. Again, until we see a break of structure and displacement below a significant swing low on a higher time frame, I'm going to remain bullish on the dollar, which means I'm probably not going to be getting involved in a trade today with this strong bearish reaction after buy side liquidity. I want to see sell side liquidity taken and then a change of structure for the bullish dollar to resume. I still think it's going to reach up here into this daily fair value gap. This could be, and I'll just say this could be the weekly high Wednesday. Seeing such a massive, strong reaction off of buy side liquidity. Now, the pound is still looking bearish. It's still respecting it's reached up into this 30-minute order block. It just tapped into it and fell away. This is what we said. This is the first place we would anticipate the pound to react off of. And it did perfectly and beautifully. But because the dollar is so weak right now and showing massive weakness, I have no interest in shorting the pound, because the dollar is super weak and has just made the, after it grabbed all this buy side liquidity, it has completely tanked and reversed, which typically is a signal for a stop hunt. So it's just reaching for buy side liquidity so that it could run lower and target some of this sell side liquidity down here before it resumes its bullish run up. The market is always seeking liquidity. It's always moving from liquidity to liquidity. That's how it moves. It needs to collect orders in one place so it can move to another place and collect orders so it can move. And that's just the way it moves. So after this big aggressive run up into buy side liquidity, it took out all of the orders, the buy orders. So buy stops, if you were short, were here. Or if you were doing breakouts, people doing a breakout strategy, they would have buy stops set right here to buy when it breaks out to anticipate a bigger run up. Their stops on a breakout strategy, where are they going to be? They're going to be down here. If they get in here, they're going to be down here. And so price, they're currently in drawdown right now and crapping their pants, because some aggressive people would put a buy order here, and then when price runs up, they're feeling really good and they move their stop up to like maybe right here, and now we've grabbed that liquidity, which also correlates into this OTE area. But a longer time frame breakout would be at this swing low. So there's more liquidity under here for price to grab. The dollar could reverse right here. This has been an area, this weekly volume imbalance, fair value gap. This was a couple weeks ago when we started the stream. We noted this, and we can see it's acted as support and resistance. It's acted as or support here and here and here, and it's coming back down into it. This is a daily fair value gap that we've completely closed in now, and then it's completely rejected off of. So we could see the dollar consolidate around here right now this morning, create some liquidity, maybe pop in back into this volume imbalance that then shoots us higher. But right now, I really just don't have any desire to participate in the market right now. This was a really beautiful reaction off of this 30-minute order block that we identified. Wick to the body. It's come back up. It's filled in this imbalance. It got back up into that order block, and then it's fallen away. And it could very well just reverse from here. You can see that the euro has taken out buy side liquidity from this old swing high right here. So on a 5-minute time frame, if you get displacement below these two 5-minute candles, like you start seeing price come and then you get displacement below with a fair value gap, that would be a 5-minute breaker, because these candles right here took out this high. I would have rather seen it take out this high, and I'm still probably more inclined to wait to say, hey, if it takes out this high and grabs buy side liquidity up here, now I'm going to be more interested in a rollover if we get a break of structure to continue short. Massive volatility in the markets. This is where traders get chopped up super bad. It's just seesawing. This is what ICT calls seek and destroy. So it's not trending any direction. It's just reaching for liquidity on this side, reaching for liquidity on this side. It's going to reach for liquidity on this side again before it targets this liquidity again. It's just a seek and destroy kind of day. It's not a high probability day. You have FOMC minutes this afternoon coming out. You had pound inflation, which really shot stuff. Those numbers that came out overnight, which is what caused this huge drop to grab all this liquidity down here. And there's so many orders. There's a lot of people. The reason people are down here saying, hey, if price gets below here, we're buying. So it sucks up all these orders. But to do that, you're trading against the trend. And that's just not a wise way to call bottoms. I think they call it trying to catch a falling knife. You don't know. You don't know where the bottom is. Until we get a shift of structure on higher time frames, we remain bearish. If you look at the 4-hour time frame, until this swing high gets taken out on the euro, we are bearish. And you might just get, this was a stop run. You see it didn't displace below this low. It didn't displace below this low. And so now we may just start ranging. We could just reach into an area of consolidation here. On the daily, you can see we've been bearish. Oh, grab something right there. Let me hide all that. We've reached up, we grabbed liquidity, we failed to displace above and make a new low. We've broken structure. We displaced below this low. And now are we going to displace below this low? Currently, we engineered liquidity, we grabbed it. Your first line of liquidity here is above this day on Monday, the opening day this week. That's your first level of liquidity, and then your high from last week up there. When I turn the lines back on here, you'll see this is your next sell side liquidity zone. We have relative equal lows now here on this candle and this current daily candle. And then you've got this fair value gap plus a volume imbalance right here. This is why I'm still bearish until if we got a clean, highly displaced candle above this candle right here on the daily time frame, we remain bearish. If it displaces above that and takes it out, you would look for price to come back into this area to go higher and then start targeting these highs up here again, these relative equal highs. Which long-term, I think long-term, and I mean months-wise, I am bearish on the dollar and bullish on the foreigns. But currently, we're in a downtrend, which is a retracement of this leg up. So we're back into a discount level of this leg. On the weekly, you can see it. We're back into a discount level from right here. Sorry, I just turned on all my objects again. So get rid of that. So your discount, your 50% level is going to be right in here, which is where we're at right now. I'm going to go ahead and take off these old trades and lines just to kind of clean the chart up a little bit. On the euro 1 hour, it's currently respecting this order block. The wick has run up above it, but the body, if the body closes inside of this order block, it's still valid. I'm going to take off that OTE. We don't need that anymore. But you can see there's buy side liquidity up here. So that would be in line with a fair value gap in this order block up here that we have never tested. This order block is what sent all of this lower. And so I would be interested to see if price grabs this liquidity, this fair value gap, and this order block. I'm going to take the wick to the body of this order block right here. I'm going to drag that out. So this, and there's these are relative equal highs. They're not perfectly level, but there's stops up here. So what we're going to do here is just say relative. We're going to say relative equal highs slash buy side liquidity. So this is what we could be reaching for before we see a reversal here. And if that's the case, then I'll look for the 15-minute or 5-minute to see after we reach back up into here. If we see a break of structure around here, that's where I would be interested in getting in. As price reaches up for that. But I'm not going to take a counter trend trade up into that. It does not have to go there. It could reverse right here. Pound is weaker than the euro, but the dollar is also weak. So we're not going to be trying to take a short from here just yet. I think I would want to see price come up into this fair value gap. Does it respect this right here? Which would be in line with this 30-minute breaker. So this move started right here. Some people would say it started right here, but you can see this got broken and displaced above from this candle, and then all of that got taken. I would be more inclined to say, see if there's anything on the 1 hour. Yeah, right here, which is lines up right here. This 30-minute breaker and this fair value gap. So this is the order block right here, and I do the wick to the body as potential entries if I'm just going to enter blind, and I would put my stop above the body, a few pips above the body of the order block candle. So it would be like this. I would say as price comes up into that wick, or let's say sometimes I target 50% of the wick. It doesn't have to come all the way up to the body, but if you just did, hey, when it touches that wick, we're getting in, and we're going to put our stop a pip above or 2 pips above the body of that order block, and then we would target that right there. Did not take that trade, or we wouldn't have. We're not even at 1-to-1 on if you had taken that trade yet. I wouldn't, just because the dollar's so weak and showing weakness. Pound is weak as well. So if the pound stays weak and the dollar starts strengthening again, then we could look for opportunities. But I would, based on what I'm seeing, it looks like the dollar is going to run. We could get a pullback up into here, and then the dollar rolls over, and that's going to be like a bull trap. So anybody that's bullish dollar and they see it start strengthening, well, once it reaches back up into these fair value gaps and reprices this, it's going to roll over. So that's why I didn't take that trade. I think it's going to dig a little deeper. And euro is reaching up for that liquidity up there right now. Seek and destroy kind of a day. This is the day that you sit on your hands and do nothing, and you just watch That's all you do. You just sit here and watch. There are no high probability setups in this environment currently. They could show up in an hour. But right now, they're not there. Take that off. If this is going to be a reversal and this is the low of the week for the euro, this, and I just said 20 minutes ago, 30 minutes ago, whatever, this 1 hour order block, if you get a displacement above it and a fair value gap, could be your turning point for Thursday and Friday if this is going to be a reversal for the week. This order block right here shot down, grabbed all this liquidity, and then we broke back above the swing high from that order block. That now becomes a breaker block. And you would look, it's obviously creating potentially a beautiful fair value gap in here. So you could look for price to return into there if it's going to reverse. I'm not saying it is. I'm not calling for that. But it's now taken out these relative equal highs. It's reached up into that fair value gap in this order block. This is the wick to the body of that order block, which it's reaching up into right now. Your next level of buy side liquidity would be, your biggest target would be up here, which would be aligned with this 4 hour order block right there. And it could just start carving out today and tomorrow, carve out this range right here. There's nothing attractive about any of this. We've grabbed this. So what did I say a few minutes ago? We grabbed this liquidity. We've reached into this order block. If we get an aggressive reaction off of this, and we see a shift of structure lower, then I'll consider taking a trade. Currently, no. What I say, I want to see how price reacts off of this 15-minute fair value gap inside this order block. If it keeps violating bearish order flow, then we have no trade. Price moves from liquidity to liquidity. Identify the drawn liquidity and then wait for price to give you an entry in the opposite direction. So if you're bearish bias, you want to see a bullish drawn liquidity and then an entry for your bearish bias. You want to see bullish liquidity get run, buy side liquidity get run. Beautiful reaction here off of that 15-minute fair value gap. Didn't quite get to it. Order block, fair value gap, OTE, all of the things. But I don't think we're done. Dollar, super weak. If you were bearish on the dollar, this is what you would be looking for, is a run on stops, relative equal highs, run on stops, closed in a fair value gap, traded back into it. You would now expect this daily fair value gap to act as resistance. But right below it is a weekly volume imbalance, which has acted as support. So could just range around here for a little bit. I would expect this sell side liquidity to get run on the dollar before it wants to run higher. But with such an aggressive move up and an aggressive move down, you would anticipate if it's going to do that, it could pull back and rebalance some of this price action, because now you've had nothing but buy side, you've had nothing but sell side. And so you have these, where these imbalances cross over, it's still imbalanced price action. Getting a nice reaction here. Did not take out the overnight low from London. Pulled all the way back almost to it. Beautiful reaction on the pound dollar off of that order block and almost that fair value gap. All right, pound, here we go. Our euro has grabbed buy side liquidity. Euro's grabbed buy side liquidity. It's hit that. What's this? This order block right here. Where did we frame that off? 30-minute time frame. Wick to the body. He got up into the body of that order block and has fallen away. So we have taken out some buy side liquidity. Is that going to be enough to roll this thing over? We're going to watch and wait and see. It could be enough, but we would need to see a break of structure right here on the 5-minute time frame. If we saw displacement below this, this would become a 5-minute breaker, wherein you went down to go up to grab liquidity, and then if it displaces back below here, that could be an entry that we could target. Which would mean you would want to see displacement here above this 5-minute candle, and then that act as your breaker, 5-minute breaker bullish for the dollar. A lot of stuff happening, aggressive movements going on. Some big waves rolling in. Excuse me. Oh gosh. I don't like that it left these relative equal highs here into that fair value gap. I may want to make one more dig up on the pound. On the euro, we've taken out the overnight high. We've taken out, let's see. Sitting and waiting. You have 30 minutes here. I'd be interested to see how this candle, this hourly candle closes. If it closes back above pretty strongly here, then this 1 hour breaker could be a reversal for the week. There's just so much here that is giving you conflicting information and nothing that makes you feel super strong. Do 30-minute candle. You have the initial opening for the markets. US30 still at the bottom of its range, hasn't broken out yet of this dealing range. We're still at the bottom of it right now. We might have tapped just below it, but I want to see it. I want to see it grab that liquidity and aggressively come back in, or I want to see it displace, show some unwillingness to go back in, and then it goes lower. So we're just not doing anything on US30 right now. Euro's got 28 minutes on this 4-hour candle. We have a failure to displace below this swing low, failure to displace below the same swing low, So we've had 2 times we tried to get below that swing low and displace below it and close it, and we could not. So you could be anticipating these relative equal highs into this 4-hour order block up here. Swing high, swing low, swing high, and we have not displaced below the last swing low. So could be reversal, relative equal lows, lots of liquidity, fair value gap, grabbed it, and an aggressive reaction off. But because we're still bearish, we were anticipating buy side liquidity to get run. We don't take an order until we see buy side liquidity get tapped into. We've seen buy side liquidity get tapped into here on the 15-minute time frame. And it's about that time, the morning potty routine for the dogs. So they're coming down, my 2 golden doodles. So I'm going to take a break here real quick for just a couple minutes, let them out to do their business, and then I'll be right back. All right, we're back. Had to let them get out there and do their thing. So what we were saying was, because we're bearish bias overall, we want to see buy side liquidity be taken before we look for an entry. We've had buy side liquidity be taken right here off of these relative equal highs into a 30-minute order block. That created a swing low. We displaced below the last swing low, so this 30-minute order block is valid. You're seeing price begin to move away now. You're starting to see some dollar strength come back, but again, be careful. You would anticipate price repricing into some of these imbalances here. So we're not just like, oh, yep, dollar's going to run all the way back up now. It could, but because of this aggressive buy-side liquidity grab and such an aggressive reaction back down, I'm going to want to see some more evidence that we want to go higher. Beautiful. I did not take this, but this was a great, beautiful entry here on the pound, if it does, in fact, rolling over now. Euro, we are going to want to see displacement below this level with a fair value gap, and that could be something we target to drop lower. You have 23 minutes left on this hourly candle, this hourly order block. I would hope that this can close back inside of here, and this is just a damage wick, a stop hunt wick here that then sends this thing lower. Again, we have no wick down here on this candle. Market does not like to leave no wick candles in place. It likes to use those as draws on liquidity. So we might get a nice setup here. We'll see. Beautiful reaction off of this. We're getting some displacement here on the pound. Back below, you have a small fair value gap right here. In the next couple minutes, it could get wiped out, but you could look at something like this. Super aggressive. I would probably want to put it more like there. So you had a run back up, it rebalanced, it reacted off of this higher time frame order block we've had. So that's a buy side liquidity rebalance. You're getting displacement below and creating a break of structure, leaving behind a fair value gap right here in the next 1 minute and 5 seconds. I'm not calling this as a trade, but it could work out to being a really nice setup there. Euro dollar, we're going to want to see displacement below here. Dollar reacting off of the bearish order flow, off of these fair value gaps it created. This is why I would not be immediately bullish on the dollar right now, because we had such an aggressive reaction from this buy side liquidity. You would expect price to retrace a little bit, rebalance, and then make new lower lows and into these sell side liquidity areas here. It doesn't have to come down there. It could reverse right here. So we're just watching and waiting, trying to be careful with what's going on. So on the 5 minute, this is why I did not call out this trade. You had a big bullish close. You still have a valid fair value gap here, but you can see it gapped up pretty hard. Again, I don't think the dollar's done coming down lower for today. It might. This might be the rollover point. I'm going to leave this up here to see just exactly how it would work out. I'm not super confident in it just because of how price is moving today and the dollar weakness overall currently. We're going to need to see again on the euro displacement below this level and create a fair value gap for me to consider taking a short position this morning. Maybe I can get my music back up while we're waiting. Let me see if I can figure that out. I don't know what happened to that thing this morning. We came on, it just started making all kinds of random noises. Hey. Always nice to have some tunes going on. I keep saying I'm going to build a new playlist, and I need to. I just grabbed all this stuff off of YouTube. Has a library of music that you can use that is copyright free, so you can use it on your streams, and so you can just go in there and find a bunch, download it, tie them all together, make an MP3. At least that's the way I do it. I'm sure there's a better way, but that's the way I've done it. I need to make a new one though. It's been 11 days of this. See why we didn't take that trade? Relative equal highs up here. Fair value gap that it didn't dig into. So we're just waiting. Dollar reached up into that fair value gap. US30 is not doing anything. NAS is still falling. S&P kind of consolidating. Let's read some headlines. S&P 500 tumbles 1% as no debt ceiling progress unnerves investors. 17 minutes ago. Futures dip as debt ceiling impasse keeps investors on the edge. U.S. equity futures slump early Wednesday ahead of release of Fed minutes while no deal in sight in debt ceiling talks. It's all about the debt ceiling, man. It's crazy to think that the largest economy in the world is going to default. Probably not going to be a good thing for the markets. And it doesn't look like either side is willing to budge. And ultimately, I mean, there's no win on either side of this, because if they just raise the debt ceiling, eventually it's just going to cause interest rates to go higher. They got to tax more to cover the future interest payments that they just raised the debt ceiling on. They're just kicking it down the street to deal with later, and it just gets worse and worse and worse. It will blow up eventually, and if they cut it now, if they don't raise the debt ceiling and there is default, the repercussions on the financial markets will be massive. Currencies will go crazy, markets will go crazy, massive unemployment. I mean, you're going to see, which, okay, so the Fed raising rates was to try to curb inflation. But you would see massive unemployment. You would see people losing their jobs. You would see a huge black swan event in the market like you did in 2008 and in earlier crashes. So do they get it figured out? I mean, it doesn't feel super optimistic right now. They've only got I think they are spending like 18 to 20 billion dollars a day to keep the government open, and I think they only had like 67 billion dollars or something left yesterday. That's what was on their books as being in their account. You see on the 5-minute time frame here, we're kind of leveling out, reaching back into these fair value gaps. We've displaced above that swing high, created a fair value gap. We filled it back in and balanced. So if we get a break of structure, displacement lower under this level and this level, you could see a return into a fair value gap that then gives you a drop lower to target into a discount of this swing low, this swing leg up. We sell high, so price has returned into a premium level, taken out the overnight high. Hasn't taken out yesterday's high yet, but it has swept all of this buy side liquidity and reached up into this 30-minute order block and rejected off of it nicely. It's currently holding above the 1-hour breaker. And in the next 13 minutes or so, if it doesn't close back inside of that, it technically has created a 1-hour breaker. So that would be a bullish sign for the euro. And since we're bearish on our bias overall long term, on a higher time frame, we would just sit on the sidelines and do nothing. Because we're not missing anything, we're waiting for our setups. Because we have a bearish bias, we've seen buy side liquidity get run. And now we're just waiting to see if price gives us a change of structure with displacement, giving us an opportunity to get in on a fair value gap that we can run lower. That's what we're waiting for. What's Bitcoin doing? Two and a half weeks of nothing. Sitting here. Consolidation. Relative equal highs up here. Order block below. Buy side imbalance yet to be filled in all the way. It did reach about 50% down in there. You've got sell side liquidity under here and an order block. You've had a break of structure. But you have had a failure to displace below a swing high or swing low. The daily breaker here on the gold. Fair value gap up in here. Daily order block up here. We've dug into sell side liquidity here, here, and here. We may not need to dig any further for it to run up. And if the debt ceiling stuff goes badly and they don't reach it, I would expect gold to reach up to these highs again. Gold is still viewed as an asset by a lot of people. A safe haven when risk off in the markets is happening. And in a situation where the debt ceiling talks are creating all this uncertainty, it's definitely a risk off situation. So you would anticipate gold wanting to push up. Here you can see on the daily time frame here, I'm going to take off that OTE. We don't need that anymore. This was our weekly imbalance. This is a daily fair value gap. We've completely closed it in. Price is respecting this fair value gap. We're at a daily order block. So price does not have to reach all the way up into this OTE and into this fair value gap. It doesn't have to. if it keeps respecting this fair value gap and this order block, we are in a premium of this leg down. We're above the 50% level, so we are at a premium level. And it's reached, filled in this volume imbalance and this daily fair value gap. So this could be the return of the bearish dollar. If they reach a deal on the debt ceiling, this thing's going to tank. The markets are going to take off, and the dollar is going to resume and reach for these relative equal lows down here. That's why I say long term, I was bearish dollar and bullish on the foreigns. I'm still that. But we've been in a short term, we've had a break of structure, and we've been in a short term retracement of this big leg down. So we could be seeing the top of this rally, of this rip rally. So you've had a bearish structure, you have a bull rally. It rips up only to just collapse. Relative equal lows here, relative equal lows here, big monthly volume fair value gap down here. I think long term we are heading down there, but we may see some crazy crap happen. Sorry, I almost cursed, trying not to curse on this stream. Before we get that, over the next week and a half, I think we're going to see some of these type candles as we get reaction to news in the marketplace with what's happening. Inflation data coming out, unemployment data coming out, debt impasse news coming out every day. It's a potentially very dangerous situation to be in if you're trying to trade. Euro's still climbing and not willing to displace lower. If we get another dig up into this buy side liquidity, and then we get a shift of structure, we'll be watching for that. Otherwise, we do nothing today. I need to check my schedule this morning, see how much longer I can stay on. What time is it? So I could probably stay on for about another 30, 40 minutes. If you guys want to hang with me. Getting a push back up. Dollar is continuing to fall. Like I said, I appreciate that, Corey. Retrace back up into rebalance some of this area here, only to target some more of this sell side liquidity down here. We're going to need to see the dollar get super bullish here and get some displacement above these swing highs it's made. 5 minutes for this hourly candle to close. See, the pound has dug up into this order block here. And fallen off pretty nicely. I would still want it to see it get up into this fair value gap, I think. It's left relative equal highs up here, right here and right here. If people were short this morning and they were like weathering this pullback, they would have moved their stop here and potentially even down here. Now that it's had 2 rejections, their stops, anybody short here, there's going to be stops here protecting profits from up here. And you have a fair value gap right here. So I would anticipate the pound coming up into there a little bit more, which would mean more dollar weakness, which you're seeing here. I think it's going to reach down here into the sell side liquidity, which means the euro is going to make another dig up and create a 1-hour breaker block, bullish breaker, which would be against our bias to trade. So when I get conflicting information and I have a higher time frame bias that isn't being respected on lower time frames, I don't do anything. I just sit on my hands and wait. There's nothing in there that says this is a good opportunity to put your money into the marketplace. This is just a day sitting on the beach, watching the waves roll in, enjoying the ocean view, and seeing how the market prints. The more you watch, the more you observe, the more you talk it out as you go, the better analyst you're going to be, and the better your eyes are going to be at spotting your setups. Again, we would need to see displacement below these levels here before we would entertain a short position. Yeah, man, still relaxing. Because price is not, price is acting very bullish and we have a bearish overall bias. We're just relaxing. We're just chilling out and enjoying the view and enjoying watching candles print and watching how price moves. It is truly an enjoyable thing for me to do. I don't have to be taking a trade. 98% of trading is sitting here waiting. Venator trading, man, that's what it's all about. Venator is Latin for hunting. And that's what I feel like I do every day when I come into the markets. I'm sitting in here, sitting in the woods, waiting for that trophy buck to show up. And a lot of days, he doesn't show himself. But I still enjoy being in the woods. I still enjoy being out here in the hunt. And you just sit and wait and you be patient. Patient traders are paid traders. They get paid. The ones that are trying to catch every break of structure and like they're down here on the 1 minute, and I guarantee you there were people who saw this break of structure right here and they're like, oh, we're going up. There's somebody that caught this, but it's against my daily bias, my overall bearish bias. And there's people that saw this as a break of structure right here. And so they saw these fair value gaps and they tried to sell right here. And they put their stop above the candle that made the fair value gap and they got stopped out. There's no reason to go any lower than 5 minute. 15 minute is really a beautiful place to be. All right, man. Enjoy the rest of your day. Follow me on Twitter. If something develops, I will post stuff there. But we'll be back here tomorrow at 7 a.m. Eastern. Pop in. At least we got our music back. I mean, it's kind of a cool vibe, the playlist, but I guess I've just been listening to it for so long now, so many days. All right, new hourly candle opened, so this hourly candle closed above this order block. So technically this is a bullish breaker. So if this next hourly candle leaves behind a nice fair value gap right here, it could be, if you were a counter trend trader, looking to take this up into some buy side liquidity up here into these higher levels. So I'm going to give this about 20 more minutes, 30 minutes maybe. And then I'm going to call it for the live stream today. We'll see if we get any momentum in this new hour shift. And as we head into the 9:30 open for the New York Stock Exchange, see if that brings some clarity to the dollar here for the rest of the day. Dollar respecting these imbalances, but failing to displace lower. If we get strong moves down and displacement, then yeah, we're definitely reaching for these sell side liquidities. I like to see how the pound reacts off of this 30-minute fair value gap inside this order block here. Let me take this stuff off over here from yesterday. Just clean up the chart a little bit. This is our breaker that has acted as great resistance. This breaker grabbed liquidity and it has reacted as resistance. So I'm going to leave that on there. And then above it you have this 4-hour order block right here. That we had no displacement above. All right, reaching up into that 30-minute fair value gap on the pound right now. Inside of this 30-minute order block. So you've got this order block here. And a fair value gap inside of that order block, which is right around the 50% level of that. Getting a nice reaction off of it currently. I'm just going to wait for the dollar. Dollar's just hanging around here. It needs to displace higher or lower to give us a clear direction. Zoomed in a little bit on the 5-minute time frame. This is your 30-minute order block all inside here, and this is your 30-minute fair value gap. Obviously on the 5-minute time frame, you've got a fair value gap up in there. We've had no displacement below a swing low, so no change of structure. Euro, until the dollar displaces, the euro's not going to displace. After grabbing all this buy side liquidity, the dollar has shown no ability or aggressiveness to return to a bullish order flow. We would need to see displacement above this high here to make me think we're gonna return to a bullish order flow. But because of this buy side liquidity raid overnight and into the pre-market hours, massive displacement. So energetic run up, energetic run right back down. And now we're just hanging out. And because we know on the dollar, we've already reached back above a premium. We have pulled into a daily order block. We have rebalanced. We have completely filled in, traded through this fair value gap, and price has respected it currently. Of course, we still have several more hours in today's trading. But if it closes like this, it definitely feels like Wednesday could be the high of the week here for the dollar. Respecting these higher time frame PD arrays, we're in a premium. We're at a PD array of a fair value gap and an order block, and prices respected that. So you could anticipate this as being the high of the week, and now you get your Wednesday reversal, and then Thursday and Friday end up coming back down. I don't know if that's going to happen. We'll need to get some more confirmation as price delivers to us what it wants to do and where it wants to go. We're trying to find the clues in line with our overall bias. Oh, got some cold coffee left. Oh, that's good. UK inflation data offering sterling temporary support. That's an hour ago. Inflation data came out here and the sterling dropped. And just in the last hour, it finds support. So how did the inflation data over here that tanked it now offer support? I don't understand how people write headlines. Dollar gains on flight to safety. The dollar is tanking, y'all. It's like as soon as they write the headlines, it just reverses. It's like, ah, no, psych. Like, don't read the headlines. Don't trade off of headlines. Dollar gains. Oh, yeah? Did it? I don't think it did. It ripped up only so that it could drop lower. News people don't understand how liquidity works. Small little gap up. Probably are gonna just not do much until the next, in about 20 minutes when the market's open. Around there, we'll probably start seeing some movement. It really was a nice reaction off of that fair value gap on that 30-minute time frame, though. That was a really nice reaction. If you entered at that fair value gap and you had your stop above the candle of that created the fair value gap, this one right here, you would almost be at 1-to-1. And your break even would be down here. and your overall target would be somewhere around there. That really was, I wanted to see. If you look on the lower time frames, we're starting to get displacement now on the pound. Dollar is starting to climb back up. We would need to see displacement above this high. A pretty strong move. Euro is not giving us displacement lower. The pound is. We have 3 minutes left on this 5-minute candle. He did take out anybody that had their stop right here, just got swept on this into that 30-minute fair value gap. We'll see how this 5-minute candle closes. I'm not trusting anything yet that that we're going to roll over. I don't have any faith. You can see the euro is not playing along or cooperating, and you can see the dollar is also not. It was like, oh, maybe no. There's nothing that is screaming that you should confidently enter into the market right now. See if we got anything going on over here. On the tweets. Bespoke Funding has put out a tweet that says that we are extremely close to being able to offer a second broker for our traders. Still have the option of trading with ACAP. Most of the firms out there right now are using ACAP as their main broker provider. There's a lot of people that hate them, a lot of people that love them. I mean, so far I don't really have much issue with ACAP. There have been a few server issues where things have gone offline in the middle of trades, and most of the firms, when that happens, are great about fixing that stuff, resetting accounts, whatever. Be interesting to see who their second broker is going to be. Bespoke is great. I've really loved working with them so far. They've been super fast and responsive. Their Discord is great. They're very active in there. I highly recommend Bespoke Funding. They offer the largest maximum account allocation that you can purchase without scaling up accounts, just purchasing accounts and passing challenges, $2 million. That's why we're doing this $10K to $2 million funding challenge, is because they offer that. Let's see if we're scrolling through here if there's anything else in Twitter that would Bespoke just passed 10,000 Discord members. That's huge. That's great for their business. Prop firms have to have a pretty solid amount of people that are actively using them for challenges and funding. So that is a great piece of news for them. 10,000 Discord members. That's a shout out to Bespoke. Way to go on that. Good job. So we got about 15 minutes till the New York Stock Exchange market opens, and we might get some more dollar direction here. If it's going to return bullish, we'll find out here in the next probably 15-20 minutes. But I'm anticipating sitting on my hands for the rest of the day and not taking a trade today. I can't remember who I was talking to, a friend of mine. So I was telling you about the frustration of going to break even at 1.5, like our rules tell us to. We risk 2%. We risk 2% per trade. So when you're up 1.5 R, that's 3%. You're sitting in profit. And so Monday we were at 1.5 R, and we went to break even, got wicked out. Tuesday, yesterday, we were at 1.5 R. And got wicked out. So both days we were 3% in profit. And had we just closed those trades at 1.5, we would be at 6% profit. We would have passed our evaluation 5% profit target, and we would be funded today. And so they were like, isn't that frustrating? And I'm like, I mean, kind of. You have to stop thinking of it in terms of profit and loss, and you have to trade your system. That's what this is all about, is system trading, and understanding that trading as a career is all about probabilities. And so you have to trade your probabilities. You have to know what your edge is. Our edge is A+ setups off of order blocks, breaker blocks, and fair value gaps. And when price aligns with our edge and it gives us the setup, we take it, and we take a 1 to 2 trade. We go for the low hanging fruit. 1 to 2 is low hanging fruit. 1.5 is even lower hanging fruit. But statistically, at 1 to 2 with a 50% win rate, we're going to get filthy rich. So I don't care. I want to see profit hit my 1 to 2 TPs. Corey's asking, you two are doing it together. Just another guy who's following along. I don't think he's in a challenge right now. Yeah, I'm pretty confident he's not doing a challenge, but he's following along, and we message. He's just a friend of mine in real life, not online, and he keeps up with what's happening. And he's kind of waiting to see how this challenge goes and how this funding process goes, and then he'll probably be like a bandwagon guy and jump in and be like, okay, I'm going to do this now. But he was just dealing with the psychology of knowing you could have passed yesterday if you would just take 1.5s instead of 1 to 2s. Well, statistically, you have to have a higher win rate if you're only taking 1.5s. Your win rate is going to need to be in that 70% range to be consistently profitable, like 65 to 70. And my win rate with my strategy and the way I execute, I take fewer losses, I take more break evens, but I hit my wins, and those are what keep me consistently profitable. So I stick to 1 to 2, and I execute my edge on those probabilities. And over the course of 100 trades, you can't look at the last 2 trades in isolation by themselves. You have to think of them in context of the previous 100 and the next 100. And there's going to be sections of that 100 or 200 trades where you're going to hit 3 break evens in a row, or you'll hit 3 winners in a row, or you'll hit 2 losers in a row. Typically, taking 2 losses in a row is the highest that I see right now. But the nice thing about taking 2 losses in a row is on your third, if you find a winner on your third, you're at break even. So you're risking 2%. You lose a trade, you're down 2%. You find another high quality setup, you take a loss, you're down another 2%. You're down 4%. You execute again, you wait, you find your high quality setup, you hit a 1 to 2 winner, and because you risked 2%, you won 4%, which takes you back to zero break even for those 3 trades. And that's how this system works. That's the beauty of the system. Currently, we've taken 7 trades in 11 days. And if you take out the break evens altogether, then you would 3 wins, 1 loss, which is more than 50%. But that will even out over the course of this challenge. I am not scared to take a loss, but I'm only going to take a loss if the setup is a beautiful setup and it's a A+ high probability setup. How about 8 or 9 minutes here as we head into the 9:30 New York market session open. And we'll see what happens with the dollar here as we head into that. We've already had our sell side liquidity run both on the pound and the euro. So would we get a deeper liquidity run potentially? I'm not feeling super optimistic about it. Here's our 30-minute. Again, this is a, I need to label these when I put this up so people, 30-minute bearish order block. And this is a 30-minute fair value gap. We have our relative equal highs that we've run into a 30-minute fair value gap here. I believe that was 30 minutes. Let's just verify that. I'm sorry, that's a 30-minute order block. And it actually goes all the way up there. I only had highlighted the initial wick to the body. That's typically how I like to refine my entries on order. If I'm just taking an order block entry, it's usually the wick to the body is where I'm looking, and I have my stop above the body of the order block. This is a 30-minute bearish order block. And this is a 30-minute fair value gap right here up to that order block. So we can label that as well. So you've had relative equal highs into a fair value gap into an order block. So you've had that run up. This could be where it wants to roll over as the market opens. We've taken out London's high. We've completely reversed all of what London did. Just ate it up aggressively. We've created a 30-minute order block, breaker block here. This is actually a 1 hour. This is now technically a 1 hour. Well, we'll see. In the next 30 minutes, this candle's probably going to move a little bit. Does it come down and close in that? Does it come back into that order block area? It's grabbed liquidity, which is in line with our plan, our strategy. We want to see a run of liquidity, and then we want to see a structure shift. We want to see displacement away from a liquidity run. We did not get an aggressive displacement away from this liquidity run like we did here. See this? You had this aggressive run down and an aggressive run up. It did consolidate a little bit, and it has consolidated a little bit here. So that's why we're waiting until this market open in about 4 minutes to see, do we get displacement down? Do we get displacement up? And you're going to start seeing it move a little bit more rapidly here as we approach the opening of that stock exchange, as people begin to position themselves for what they think is going to happen. We don't, we wait. We wait for the clues. It always leaves behind clues. You don't have to be first in. You don't have to be second in. You can get lucky and you can hit some winners. But consistently over the long term, you're not going to be lucky. Luck is the worst thing that traders can experience. Luck. Especially new traders. Getting lucky as a new trader is the worst thing that can happen to you. $30-minute fair value gap here. Again, we're just kind of watching to see, do we get an initial spike up? Do we see a deeper dig into this, back into this fair value gap, into this order block area? Is the dollar going to run sell side liquidity here today? We're about to find out and get some movement here. We've got 3 more minutes, 2.5 minutes it looks like on my clock. And then I'm going to have to get off shortly thereafter and get on about my day. All right, here we go. About a minute left, and then we're gonna see if this was the real deal and we get a reversal and this is the high of the week, or we're gonna see if we're gonna get a bullish dollar here as we anticipate the debt ceiling not working out. I would anticipate a more bullish dollar unless we get some good news on that debt impasse stuff. People are going to want to stay out of the market, which means they're going to put their money into the dollar as a safe haven. It's a risk-off scenario in the markets, which means it's going to be a higher dollar. But we'll find out. We got about 20 seconds. A lot of times you get a Judas swing as the market opens. You get a false move to grab liquidity, and then you get the real move for the rest of the trading session plays out from there. So, all right, here we go. We just opened. Not much of a reaction, quite honestly. The market's not US30's made quite an aggressive run up, but the NAS did not, and the S&P did not. The dollar is just sitting around doing nothing. Pound is doing nothing. Euro, not a whole lot of anything. Again, we want to see energetic price moves. With FOMC this afternoon, the markets may be pretty quiet this morning. Just consolidate around, hold steady to where they are. The dollar's not going to go up or down until those FOMC minutes come out. But currently, we're not getting any kind of significant. S&P's dropping hard. NAS is not. US30's dropping hard. Again, until the US30 gets below its range and does something else, not interested in it. this long-term range that we're in that has failed to get out of for over a week now. I want to see some displacement below there, and then a return, and then some structure shifts here that would make me think it's going to go lower. Euro is giving us a little displacement down now, so we're getting some dollar rally, some strength. We'll see how this holds up. Pound not dropping as aggressively as the euro. As the dollar is climbing, the pound is holding fairly steady. The euro is giving us a break of structure with some displacement, so we could get a trade set up here. We're going to need to see this 5-minute candle close below. I want to see a close below the body of this down candle here on this 5-minute. On the 15-minute, there's no fair value gap currently. Pound is not dropping. Dollar rallied, but again, until we get a displacement close above a swing high, we're not going to call it a market structure shift. Always wait for the candles to close out before you reanalyze. See how price is going to respect this imbalance here in this little order block. Got another minute here. This is not displacement. This is not an energetic move lower. This is dipping into the 1-hour breaker block. That would lend credence to the framework of a bullish breaker block right here on this 1-hour time frame. We're just retracing off of this leg up currently. 15-minute time frame has created no structure shift. This is not a structure shift. This is a swing high. You would anticipate a swing low to make a new swing high. On the 5-minute, okay, now we're getting into displacement range for a change of structure. On the dollar as well. So now I'm going to be watching for price to come back up. If I were going to enter trade, and I'm thinking about it, but I'm not 100%. I think I would want it to be something like this. Right here. We don't have a fair value gap yet. After this 5-minute candle closes, we will see what we get. And then I do have to get off. Time is demanding my attention for other things going on. We'll give it 3 minutes here and see what happens. 3.5 minutes. If we get a fair value gap in here, I would want to see price come up to where we are right now. So as we get closer to the end of this candle, 5-minute candle, I'm going to come over here to my MT5. I'm going to move this mic over so you can hear what I'm talking about. Go down to the 5-minute on the Euro time frame, Euro dollar. And we're going to put our lines in, and I'm going to say 107. 107.862. I'm calling as a sell limit with my stop at 07942. And our TP is 07692. Oh, 7694. That's what we'll call it. Cool. And we are going to set a sell limit order right there. Placed. I'm going to take a screenshot of that and put that on the Twitter. What is this? This is 2.1. We'll put in our screenshot and we'll tweet that out. All right. Got that set up. Leaving a tiny little fair value gap here. Right there. You've had a break of structure here. Displacement. I want to see it come back up into this order block here. That gives me a little bit more of a premium from that last leg down, and then we'll target these fair value gaps and the slowdown here for our TP. See a break structure here, fair value gap on the dollar. It's a little bit bigger than the one on the euro, so that's why I'm anticipating maybe a little bit deeper dig into that, and then we run higher up into these highs. All right, we're going to see how this plays out. We've had again, let's recap why we're taking this trade very quickly. We've had a buy side liquidity run into a fair value gap and a 30-minute time order block on a higher time frame. And so we've seen relative equal highs get run. We've seen buy side liquidity into a premium into PD arrays of fair value gaps. We've seen price now displace below and change structure on a lower time frame, leaving behind a fair value gap, which is a breaker. So you have a 5-minute breaker here, comes up, runs the highs. We've displaced below it. This becomes your 5-minute breaker right there. I'll just highlight that. And we'll make that teal. And we'll call this a 5-minute bearish breaker. We may not get our entry. I hope it swerves back up there and grabs us. But we'll see. It may if it takes out, you know, if it reaches down in here into our low, well, then we'll have to cancel that order and we'll just miss our entry again. That's fine. I want to get in where I want to get in. And if I don't, I'll wait again till tomorrow. So that's why we're targeting what we're targeting here. And I'll leave this on until price either triggers us in, or if price hits our initial take profit area before then, we'll cancel that order. On the pound dollar, if like euro yesterday, if we miss our entry, pound may give us another entry, so we'll watch and wait there too. We're starting to get breaker structures down there as well. The dollar is starting to rally and make up ground now. So I would love to see the dollar come back down into this fair value gap right here. That would mean it would give us a possible entry on the euro. So we'll just watch and wait and see, and follow along on Twitter. But for now, we waited all morning for this, and maybe we get an entry, maybe we don't, but we'll watch. We'll watch and wait. This fits all of our criteria. This is a high probability setup. It looks like it's running away aggressively, which is fine. It can do that. It can still, as long as it doesn't hit our TP, it can still come back up and rebalance and hit into this breaker block right here. Man, I don't want to get off, but I got to. All right. We'll see you guys later. Follow along on Twitter, and we'll be back tomorrow to follow up with anything to happen. So enjoy the rest of your day. Catch you later.